Hey everybody, welcome to This Week in Pre-IPO Stocks podcast. With me, I got Clint Sorensen, Chief Investment Officer at WellShield, an outsourced CIO and investment research company. Nick Fuso, CEO of E151, a pre-IPO secondary market pricing company. Evan Cohen, co-founder of WithVincent.com, a company focused on alternative investments. All right, fellas, so Salesforce, Benioff, they had their big Dreamforce meeting. He's talking about AI agents. That's the buzz. After Klarna dropped Salesforce altogether and replaced them with AI this past week. They're looking for something new to do, I guess, right? So AI agents is the new hot thing. They're doing $2 per conversation, which I think is expensive. Maybe not, right? But here's my question for you guys, right? And maybe, Nick, we could start with you first. What kind of math? Well, first of all, what do you think of AI agents? Let me ask that question first. What do you think of these AI agents just in general, or what you're kind of hearing about them? Because I don't think a lot of people really understand what an AI agent is, right? I have an idea, but I'm interested to get your opinion.
Yeah, I'm leaning into it more now because the technology has advanced. If you asked me 3 years ago, I thought that was the gimmick and that was who you're talking to, and they don't hear your voice appropriately and connect you or answer your problem appropriately. But no, I think it's highly appropriate now to work with an agent doing that instead of prompts, and they are getting better. You start to notice that as time goes by too. So if even that's the gateway into the formal agent, I'm very happy with that. And $2.
Okay.
Oh my God, the amount of time I spend on the phone complaining to airlines and things like that. Just for example, that was last week's episode, right? I would love to immediately be connected with someone and not have any sort of hold or wait time, especially when you're dealing with a Salesforce or a banking institution where you continually get transferred to, oh, I can't do this. Let me connect you to another department. All of a sudden, this is a holistic offering where this solution, AI, is going to be trained in all apartments. It's like Neo saying, I know Kung Fu, right? From the Matrix. So yeah, I'm really optimistic about this.
Yeah. So Clinton, if you like the AI agent, what's the math? What do you think the ROI has to be? Because I mean, Salesforce is pretty clear that this is AI agents will replace people. They're going to replace staff, right? So is that the ROI? If you can make an agent and it's going to replace a human, then you got a lot of money there to kind of work with, right? At $2 a pop per conversation. Is that? Do you think the ROI that folks are looking at?
I don't know about the $2 a pop thing, or $2 a conversation. I don't know where that math came from or how they arrived at that, but I can tell you that it's going to replace a lot of people. I think it was the All In podcast talking about call centers the other day and how they're just going to be completely eradicated. Right, customer service, as you're seeing Klarna, you're seeing other companies do it. Customer service, basic accounting, obviously basic legal work. All of those things are going to be replaced by agents, in my opinion. You're going to have subject matter expertise agents that essentially help you augment and run a firm. From everything from the client experience to even marketing. Think about how many landing pages are going to be done by your marketing agent, right? Or things like that. Any kind, I think this is where AI meets or finally bursts the creative destruction. Instead of just being a fun tool to toy around with and essentially be modified search, or not even modified, better search. Now it's going to be real. And and I think this is it. This is what they laid out in that document we went over on this podcast, right? Where they laid out step 2 is going to be AI agents. They're going to be coming in full force this year.
Right.
I think that's where we're at. I think it's incredible. But I do think it's going to replace OpenAI document that you referenced. But I do think it's going to hurt a lot of people, or scare a lot of people temporarily. But I think it ultimately lifts productivity and profitability for companies and lifts the way of life long term. But yeah, this is where the rubber meets the road, in my opinion. And in terms of ROI, it's replacement of staff. If I can replace 100% of my staff, customer service staff, with AI agents, that is incredibly profitable.
Right. Okay. So Evan, since it does seem like folks are starting to coalesce around this idea that AI is going to replace people, and folks are getting comfortable with that. So then the question I have for you, though, is that I'm still not convinced that companies are going to want to like quote unquote build their own agents versus just buy something like out of a box, right? Where it's like, hey, this company has kind of constructed an agent for me that I can just take and like implement, and they'll come up with bells and whistles and different things versus me going into like a Salesforce. And of course, I haven't used Salesforce solutions, so I don't even know what it looks like. I mean, maybe it's super simple to use, right? But it, like what are your thoughts on that? Like kind of a build versus buy type scenario. Are people going to be smart enough to figure out how to build these AI agents, or is that like going to require a developer to do that still?
So I think that you're going to see a lot more out of the box solutions, just because I believe that the use cases around the use cases around these agents, I feel like they're more valuable to smaller and leaner firms than they are larger firms. And to be fair, like Salesforce is a behemoth sort of product. In fact, there are literally companies that implement Salesforce and then they hire Salesforce engineers to work on their Salesforce implementation at their own firm. So Salesforce is a platform, and so it makes a lot of sense that you would need engineers to configure the platform the best suit your business needs. So yeah, I think that out of the box solutions, and this has already happened in the CRM world, where you've seen, Salesforce invented the CRM, and then you have folks like HubSpot, and then, work your way down the funnel to smaller firms who just want the smaller solutions. So I think that makes a lot of sense. I do believe that, there's an interesting thought experiment when you think about support itself. And a lot of, like, when you're a product builder, a lot of people say that, hey, the more support tickets you have is an indication of that your product experience is not clean enough or clear enough. That said, like, if a lot of these product experiences move toward a chat interface where you're actually asking and prompting an AI bot to do certain services for you, it sort of removes the user experience that you would have digitally anyway. So it wonders, like, are you going to really need a support agent if the entire experience is already run by an agent? And so what I actually think it does is it disrupts UX a lot, which is quite interesting from like a fundamental product experience. And then you go down that path even further and you say, well, is this business a business or is it a feature? And then what it ends up you end up going down that path of saying, okay, well, you have these products that are really servicing one or two niche little features, but should those all be packaged into a bigger offering? And an agent services all of those different things together, like a marketing platform versus a marketing agent. It makes a lot more sense. So just, there's a lot of ways to think about it.
Yeah, I'm like kind of firmly in the camp that I think people are used to like apps today, and I think they're going to want apps, like just an out of the box, keep it simple for me. I want a marketing app. I want a sales app. I want a accounting app, like whatever it is. Just give me like the easy button that's agent powered. And instead of hiring a salesperson, I can hire the app. Right.
But let me give you an experience. So like today, when you want to book a flight, you go to www.united.com, or you go to the United app on your phone and you use their interface to search for flights, book a flight, put your credit card in. Can you not see a world where in the future the United app is just a chat prompt? Hey, I want to go to Dusseldorf tomorrow. Book me a flight. So much better. And you just chat with it. And therefore, the idea of an agent answering your customer support through the app kind of becomes obsolete. That's a wild world
you're describing, man. That's like there's like no website. You just like, call.
So that's
what, you just do some
precisely
Siri, and it just happens. It's like magic, right?
So then you think, so the concept, you talk about what Benioff said about these AI agents, 1 billion agents replacing you. You think about it, and it's like, do you really need 1 billion agents, or do you just need better, totally reinvented user interfaces from the fundamental products? And therefore,
I like the way you're talking, man.
It's a different approach or spin on it.
I like the way you're talking. I like that world. I like that world, man. All right, let's talk Canva. So Canva just increased their prices by 300%. Okay.
Small caveat. It's not bar none, right?
No, it's their teams. It's fair point. It's their like enterprise solution, right? But so basically the idea is they've added AI, so the price has gone up. But it doesn't look like they have like a non-AI solution. It's just like, look, we added AI, so everyone's price is going to go up 300%, right? So this is no joke. So this is my thing, like, do people leave Canva? Will they cancel their subscriptions, or like cut back on the number of seats? I mean, I would think you probably cut back on the number of seats. All this stuff we're talking about, if you can do more with less, then you probably need less people on your marketing team. You know what I mean? As many seats, so you like increase the price. It's like another ROI type thing. So like, Clint, what do you think of this? Is that the logic here? Is that they got to increase the price? if they want to keep revenue where it's at or keep growing, if the AI can do more with less, then you need to kind of make up for those lost seats, right?
Yeah, I mean, I think they got to raise the price because the cost of implementing AI at scale to enterprise, especially on the front end, takes a lot of capital, especially as you try to figure out your business model and how you're going to monetize it over the long term. In terms of their thinking, I could definitely go down that path of thinking, okay, well, our users are going to be less. We've got to price in this future less,
right.
in our future, this roadmap, less users,
right?
Less but more efficient users and deeper users. And so, yeah, I think that's probably their pathway in terms of why they're doing it. And the people who are dependent upon the product and love the product are going to be those super users. Right. And they're gonna probably keep it and stick to it. I think, Nick, don't you guys use Canva regularly?
We do.
I think I remember you saying that in a previous conversation. So I'd love to hear your thoughts on it, just because I'm not a Canva user.
Sure. No, I think but you probably hit the nail on the head for us as well. I mean, we're a small company. We had 3 or 4 people at one point logging into Canva, and now same person does it all the time. We don't need 2 people on there. So they're probably feeling that same pinch, whether it's us, a small company that will continue to grow and hire, or if it's a large company that's downsizing their marketing team. So they're like, okay, Karen's gone, but John has stayed. And then clearly that work that was divided can be done by just one person. And there you have it, right? So yeah, I think you hit the nail on the head, whether it's a large company or small. And if they're getting incrementally more spend, even out of fewer people, that's great.
Yeah. I mean, Evan, Salesforce is a SaaS company. Canva is a SaaS company. Now we're talking about number of users going down because of AI. Do you think this is going to have to be a trend, right? Like everyone's price per seat's going to have to go up, or something like. So Salesforce is doing $2 per conversation with AI agents. Canva's just raising the price, right? I guess there's maybe two different thoughts to approach it. I mean, what do you think? Do you think everybody across SaaS is going to be raising prices? Is like the number of seats go down, or what are you thinking?
I mean, to me, I think what Clint said really nails it on the head. At the end of the day, if the cost to service a customer goes up, you have to raise the prices so you can maintain your margin. That seems like the most logical thing. Now, for Canva, I think they're a pretty unique business that they have such a loyal customer base that they realize their customers are probably really sticky and that they can afford to raise the prices. And probably they did enough customer research to know that the amount of churn that they'll have based on this is probably nominal relative to the number of customers who would accept it. They probably also, and this is a ballsy move on the product experience, but if they believe that the AI version of their product experience is substantially better and their mission is really to serve the customer better, and they believe, hey, our AI implementation is really the best way to experience Canva and it costs more money, like it's probably worth it for them. They're betting on themselves. And I think that's they've done that their entire history. And so it doesn't surprise me. And look, they've got a really great market leading position. So
another quick hypothesis for the pre-IPO podcast, they're jacking up prices, not giving enough time for people to react and whittle it down. They're looking great for their sales numbers when they want to do their IPO. And then when that attrition hits 6 months or a year after, then they're already public. They've already raised the capital.
Yeah, they're on the other side of it.
Well. That's being relatively pessimistic about it, but potentially one way to look at it for, are they going to IPO? What's that?
Yeah, timeline? It's going to be interesting to see what all these SaaS companies do, right? Because I think we're, like we discussed, if headcount's going to start going down at companies, and the whole business model for SaaS companies is number of users per seats, like you almost have to have a change in approach, right? Or you do what these companies do, you just increase the price. So you either do, I wouldn't be surprised to see companies coming out. I guess Salesforce is doing that, $2 per conversation. They went from a per seat to a per event pricing model, right? Which is unique.
Well, that's how their cost comes in, to Evan's point, right? Probably rough arithmetic on what those conversations are going to end up costing them. And then they can make a very clear point if they're remotely close. Maybe it's $5 or maybe it's $1. Who cares? Right. But they can then go back and say, all right, who's better? Is it the team of support who typically go and have this performance and the call is done within 40 minutes? Or is it the AI that's able to rectify the call within 30 minutes and the customer's a little bit happier or a little bit less happy. That's really, really interesting. And the amount of metrics you can actually get from those phone calls is incredible too. There are whole businesses that are stood up based off of tone of voice, contentment from the end user without us having to do the survey at the end. It's how often do you say cuss words while discussing your problem with the agent, or how often do you get spun into different client support levels, right?
Yeah, I want an agent that's gonna like cuss at me. That would be make it feel like very New York,
Exactly.
Right? Go ahead.
Actually, if you think about it even deeper though, so if you're a company like Canva or Salesforce, but more particularly Canva, what you really want to do is you want to get as many customers of your large customer base using the AI product so that you can have the most proprietary
Unreal,
and
right?
advanced
Absolutely.
training model.
Totally.
That's what you want, right?
Yeah,
so like for them, it's like, look, if we have 100,000 customers and, only 20% of them are using the AI model, your training speed is just going to, go at that linear pace. But if you can say, hey, like we're going to force, 50% or 75% of our customers use this AI model, and it's going to allow our training to go exponentially better, and we'll have way better training data. It makes the business substantially more valuable. And we've talked about that on this podcast. I know Clint has said it a lot of times. The data is what matters, and that's where the businesses get their defendable moats. And so it makes a lot of sense that you go push all your customers to use the AI so that you can get the training data.
Yeah, right. And right now, I will say for a lot of client support, I go to YouTube and I get some random person that walks me through either a Salesforce module, a HubSpot module, a Canva module, whatever it is. They have nothing to do with the company.
Nick,
they're an outside consultant.
My new hack on this is I take a screenshot. My new favorite thing to do is take a screenshot and upload it into like ChatGPT or Anthropic, and then you ask. It tells you exactly what to do.
There you go.
It's so good. I use this. Actually, I use it all the time with
Canva wants. Pro. That's not what Salesforce wants. They want you in that ecosystem, right? So then,
fair point.
Yeah.
Fair point. But, okay, guys, let's hit on this last topic. So I was looking at. So I have 30 pre-IPO stocks under research coverage, right? And of course, I use 8View data, right, for secondary market pricing. So I was looking at the 6-month pre-IPO stock market performance for the 30 stocks that I have under research coverage. The average stock is up 70% over the last 6 months. All right. So a few highlights. So XAI is up 1,338%. CoreWeave's up 190%. Revolut's up 126%. Chime's up 88%. Scale AI is up 80%. Wiz is up 45%. Ramp's up 45%. So why is this happening? Right. So is it AI? Like, Clint, what do you think? Is it AI? Is that what's driving this, or is it?
No, I think it's a number of things. We talked about this a lot on the flip side, right? When we were talking about the lack of IPOs, a lot of the struggle in the late stage venture space. That was all, in my opinion, most of it due to just credit growth. I mean, the private sector just completely halted in terms of credit growth,
right?
Starting in mid 2022 and going through the Fed tightening cycle. And that's come to an end. The Fed tightening cycles now, we're not easy yet, but we're easing. And I think that is, I think a lot of organizations can make better decisions there. I think it's bringing liquidity back into the market. And it's not just the U.S. Central Bank, the Federal Reserve, it's global central banks. If you look at the percentage of global central banks that their last move was easing, that is ticking up. I think Ned Davis published a piece on it last week where they showed the percentage of global central banks easing and then what happens to markets after that. It's, inherently pretty positive long term when you have global coordinated easing. And I think that's the first positive bellwether or first positive sign was you're starting to see the turn in the credit cycle. And even though we got like leading economic indicators last week that showed another month of decline, if you look at the year-over-year rate of change, that's most likely bottomed. So you're finally starting to get material rate of change improvements in the business cycle front that I think are going to be supportive of continued easing by the Fed because the headline numbers, coincident and lagging indicators, are going to be slowing, but leading indicators are going to be improving in that. And I think that's very positive for capital markets. And then AI matters. Bottom line, AI has been a huge thing in not only venture, where I think it's the most profound, but also in the public markets. I mean, look at any play that's mentioned AI in a conference call is done well. All these big platforms that hold the data, NVIDIA, being able to charge an arm and a leg for GPUs. All of this has fueled an incredible run in the super mega cap tech names and also a big run in AI related pre-IPO equity. So I think it's those two things largely. I also think that venture capital got smacked hard, being a duration play in the face of Fed tightening. And I think it was really bad. I mean, a lot of the venture capital indexes I looked at, PitchBook Index, et cetera, were down considerably at kind of the worst part of the Fed tightening cycle. So call it early 2023. I mean, we did have bank failures. A lot of people forget Silicon Valley Bank did fail. Yep. I think all of these things happen, and we've rounded that corner. And so now I think it's a really great time period. And I hope it will be a really great time period for venture as long as the Fed doesn't get spooked by rising inflation when it moves coincident with growth.
Right. So on that last point, Evan, so I mean, so to Clint's point, like things got pretty banged up. The VC kind of pre-IPO stock asset class got banged up in like 2022. The Qs, NASDAQ, tech stock, public tech stocks came back, but we didn't really see that till I think really this year, maybe last year, this year. Do you think is there maybe perhaps a little bit of like a lagging effect, like the market's finally starting to come back, or is it AI, or maybe it's a little bit of all of it?
I think it's a little bit of all of it. And, the thing that while we talk about specifically venture and the trend of some of these private big names really continuing to grow, I think that we're sort of ignoring the fact that the entire private market asset class is growing. Like the number of family offices that are coming in, the number of venture funds, like it just seems like
more capital.
Alts in general, private markets in general, is just a massively growing sector. I think it's even overtaken the public markets to some extent. And it's more and more investors want to get exposure to this type of asset class, venture being just one of the many alternatives. And so, look, at the end of the day, if you have a large number of people looking to get exposure to an asset class and, having experienced 22 and 23, the flight to quality where customers really people wanted to avoid the heavy risk, they're going to go into the big names. And that's where you see hey, I need to get private market exposure. I want some venture. There's only a select names that you're going to really go after. And of course, the theme of AI is one that people want to bet on. And so that's where I think it really does explain that. I really think about it like in the same way of the public markets, and what we're going to experience, I imagine, over the next 12 months is there's just enough cash sitting on the sidelines in money market accounts that ultimately people are going to move into the market, and that will just drive up the S&P like naturally, right? Like it just will go up because the money's going to come into the market. And so you're seeing the same thing in privates. And I don't know if that necessarily indicates a bubble or that indicates that these companies are actually doing a lot better, or is it just like the investors, the amount of wealthy people just want to get exposure to the asset class, and that will naturally inflate the values of those companies by default. I'm curious.
Yeah. So Nick, maybe you're back cleanup on this. Yeah, you're like our pre-IPO stock data guy, right? But like a lot of these companies, the 2021 valuations were very high, like revenue multiples, right? Is perhaps, I think the companies have still performed well. At least the revenue numbers that I'm seeing out of have they just kind of maybe like grown their way into those valuations and maybe beyond what they had in 2021, now that we're like 3 kind of years removed from those 2021 marks. And that's why we're starting to see the market come back a little bit. Because, like a Revolut, I think, don't hold me to this, but I think in 2021, they did like a $42 billion print. And now they're back in the market doing $45 billion 3 years later, right? But they got beat up bad in 2022, as an example, right? One company.
Right. So I guess that's the part I'll lean into that. Everyone hit on a lot of good points, and this is more about the timing of when all this elapsed. But effectively, January of 2022 was the peak. Everything fell apart from them, according to our data from the ApeView side, or according to the ApeView 50. So slightly wider than, Aaron, the names that you're using. And these roll over each month as well. So we really stay with the most liquid names. So from that point on the downward trajectory, we were down about 45% into May of 2023. So it took a while. And even here today, from that peak, we're still 27% down from the peak. So it's really interesting to point out, we had this 70% growth, and it's true. but we're actually having that 70% growth off of a 45% decline. So we're still not even back to where we were. So that's probably a vote of optimism for anyone that reads into this and says, 70% up. Like, oh, that's not a good time to buy. Actually, no, we're still down. We're still down quite significantly. So there's probably a lot of legs to run. And then on the revenue multiple, what we're seeing is it feels as though on average, a lot of these companies are growing into that revenue multiple, but also the revenue multiples have come down as these companies have continued to grow. So that's also a good sign, I feel, is
which means the companies have performed better, right? Just to drive that home. That means they're generating more revenue to kind of justify that same kind of valuation, which is, I think, a good thing on the health of the business. The business is, I should say.
Right.
Yeah.
Fair? It's looking more similar to maybe some of the public comparables in terms of a multiple basis than what it looked in 2021, where it's like, wow, this thing is multiple, like double or triple the multiple of what you'd observe in the publics. And now it's getting closer and closer, which is kind of how you'd naturally think about it. As something is considering IPO as an issuer or companies considering IPOing, you'd want to think you're going to be compared to the public market as soon as you're out there. So let's start looking and acting like it. So I feel as though the numbers are starting to make a lot more sense instead of the froth that we saw in 2021.
Right. Go ahead, Evan.
But Nick, I just you going to double down on your point for a second and just understand a little bit how much of the money since January 2022 has gone into the quote magnificent seven of the private markets versus the rest of the market. Because in the public markets we see that, hey, how much of the S&P or the stock market is really just like the magnificent seven. I feel like the private markets have a very similar exposure where it's really just like SpaceX, Stripe, and a handful of big names, OpenAI, and then a lot of these pre-IPO names got crushed, and they're still way down more than 40% that they were pre-IPO or back in 22.
So what we've observed really specific to that is kind of from your May, June, July timeframe in 2023. There was a Mag 7. Like, everybody was coming into SpaceX or OpenAI or Anthropic and so on, but it wasn't super wide. And that was all the concentration. And then over the 6 months to follow and the 6 months to follow, it widened out. So now you're starting to see that demand go to various different companies beyond what you deem as like your top names. So that's where your CoreWeave popped up, and Onduril is super hot now, and Canva and ByteDance, everybody's back in play. Where at that trough, you're right, it was very concentrated, and you saw this obscure kind of reshaping of the curve of what companies were important and who had the biggest depth, whether it was by count of brokers involved or secondary transactions or bid side volume. And now it's quite a bit wider, which is healthy, I think. Yeah, healthy on a macro sense, right?
Yeah. So last thought is, a lot of people in VC kind of look primary round to primary round, right? Of course, we all kind of geek out on the secondary market, but what I would offer for folks listening to this is, if you're not familiar with the secondary market in this kind of pre-IPO stock space, you got to get smart on this, because it's every quarter that goes by, it gets more and more institutionalized. Clint mentioned the All In podcast. Like, those guys were on there. Chamath Palihapitiya and Jason Calacanis were talking about how if they didn't sell in the secondary market, that their DPI, distributed paid-in capital, would have been much, much worse than it was, right? So they were feeling really happy, really, really excited about it, because they were able to get liquidity in the secondary market. I'm hearing founders are getting comfortable with it. There's a lot of these structured tenders that are happening, which I think is the tip of the cap to the secondary market and how that works. So there's a lot of, I think, benefit and value to it. But most people invested in venture capital just see these primary rounds, right? And I think a lot of LPs may not be as familiar with the secondary market as they probably should be. So call Nick Fusco if you want to learn more about secondary markets.
There you go. I mean, a year after an IPO, never would you say, "Oh, the price is the IPO price." Right. So why should we think the same way in the venture world? Oh, there was around a year ago at $1 billion.
Yeah,
it's still valued at $1 billion.
This market's here to stay, fellas. So okay, hey man, let's end it there. I appreciate you, fellas.
Thanks,
guys. Okay,
have a great week.
Thanks,
man. All right, man.